We did not know then, none of us knew then, but certainly we did not know then what we all know now. What we've all seen play out in the press in the last year has been really remarkable, and we had no inkling of the level of what we were dealing with. We just smelled a rat. We knew something was up, and we had to start paying closer attention to something that nobody had ever paid attention to before. That is how the SOEs govern themselves.
And what was so interesting about the DBSA case was that this change in the board, changing the expiry profile of directors, all happened around the time that they were tapping the public capital market for an auction. So they were looking to raise around R1 billion in 3 and 5 year debt within 3 or 4 days of this material change in the board of directors. And there was no announcement, there was no SENS announcement. We had engaged Moody's and the JSE, and nobody was the wiser around this material change in risk. And so I think there's a lot to be said around JSE listing requirements, and I think overall transparency and disclosure. I think we touched on it on the question around ambushing and having access to information. I think one of the key things for me is that you don't know what you don't know. And so once we started digging into these enabling legislations, really understanding the shareholder compact, knowing where to look, it became a lot easier to kind of build up our questionnaires and build the process as we went along. And with listed bonds, and especially in the public capital market, it's very much a buy to hold strategy. So you need to be able to form long-term views on this debt. You're going to be staying in it for an extended period of time. So your view on management and governance becomes really critical, especially over a 5-year time horizon.
In the equity world, if a director is up, the shareholders get a notice, they get to say who's resigning, who the new ones are, shareholders get to vote on it. You know well before the AGM what potential changes are coming up. It's all publicly notified, investors are publicly notified on SENS. In the bond market, none of that happens. It all kind of happens behind the scenes. And I guess our point is that it's a public capital market, and the exact same pension funds that are invested in the equities are invested in debt. And so why should the standards be so materially different? And one of the big changes, I guess, that we have tried to drive is to make sure that these SOEs, because they don't have the benefit of a JSE equities listing like Bidvest does. Bidvest has a bond and equity, so you can kind of, piggyback off their equity. But, the SOEs don't have that. So one of the big challenges for us has been to really reinforce with the SOEs that they need to publicly notify the market timelessly, and it needs to be done via SENS. But I think it's an important point. I think people forget that it's the same public market, it's the same pension funds, just investing in a different asset class. And so, why should we be subject as bond investors to less disclosure when actually we need more disclosure, because we have, as Taryn said, the longer time horizon and much less liquidity.
How do you make it sustainable? Because now they're entering into bilateral agreements with Futuregrowth. Oh yeah, we will tell you if we change our credit policy. Okay, well that's good. Well, we promise we'll issue a SENS if we change our directors, right? But we have no enforcement mechanism except to go back in public and say they violated an agreement with us. So the problem here, the root problem here, is making this work, which is evidently, sadly, important work, sustainable. I just keep landing right back at JSE listing requirements. On June 27th, the Minister of Water Affairs fired the entire board of Umgeni Water. Just fired them all. I mean, this is after, by the way, if you look at the press over the last year, it's been quite scary what's been going on in that region with Mkhlatuzi Water and such, and Dudumayani's name was mentioned as the chairman of the company, and I don't have to say anymore. Anyway, so she fires the entire board, doesn't tell anybody. We found out, I think, a couple weeks later.
Yeah, 2 weeks later.
2 weeks later. We told the JSE a little bit after that, and they're like, oh, really? That's interesting.
Even more interesting was the response of the rating agency. So Fitch affirmed their rating 2 weeks after this happened. So now this is effectively an entity that doesn't have a board of directors. I mean, have you ever heard of that? I mean, it's almost unthinkable. Yeah. And the ratings agency affirmed their rating at AA+, I think. Yeah.
They didn't know. They didn't know.
Yeah.
So the JSE, we say, well, shouldn't you do something? Yeah, no, we'll engage. And we're like, well, what if it was a listed company? What would you do? Oh, geez, we'd suspend them right away, of course. And we're like, it's a listed bond. And they say the rules don't account for that. So there's no obligation to the company to report. There's no rules about bonds at all. Basically, you could list this bottle of water as a bond, and then its reporting requirements is like once every 18 months you have to say there's water in the bottle. That's about all there is. And it's just ridiculous. You hear my plea is you guys have the actual money. The consultants speak to clients. Some of you are clients. It's your pension funds. And everybody in this room probably feels somewhat powerless with what's going on in the country. But you got the money. Even we clearly underestimated the power of capital. I had no idea what was going to happen a year ago, right? And yet it did, and it worked, by the way. And I had a client in Cape Town last week say, Andrew, I hear you, and you're right, wish we could do something, but we've only got 30 billion rand. I mean, seriously, guys, you know, how many trillions are in the room right now, people? You know, talk to your asset managers.
Yeah.
Light up the JSC, who is currently an enabler of maladministration and possibly corruption. They are an enabler right now, and they need to get off their asses and pay attention to this, because it's gonna go against them if they don't. I mean, and each of us in our realm must do what we can do in our realm. I mean, to me, this is a classic, visibly Hollywood-style good versus evil situation. You're either on the good guy side and you do what you could do in your realm, or you're on the other side and you're trying to protect your vested interests. So let's get to the other side of this, and I had a really interesting question from Bloomberg yesterday. I don't know how to answer, is what needs to change to prevent such state capture in the future? And it was legal questions, actually, less financial. I don't know what the answer to that is, but in the financial world, I can tell you how to fix it. I can tell you how we can make access to capital, certainly in public capital markets, probably by pension funds, a much more robust thing. We can get reporting on this stuff. Tell the truth. Why are we writing that document? Why are we really writing it?
To educate people.
Yeah.
To educate our competitors.
Yeah.
We need other asset managers to jack it up. You know what I mean? This is not a future growth fight. We're doing the work. We're investing in it. You know, we're not worried about growing our business at this point. We're worried about doing what's right for the country. But we need other asset managers to read what we're writing, to listen to us, to start asking the same questions in the same meetings. And so we're writing this report so they can read it. I mean, it's not, you know, it's a weird position to educate your competitors.